Hello trendsetters and welcome to Finding the Trend. My name is David and this here is Mike. Just last week, some predicted that Gamestop was going to reach $1,000 per share. There was so much hype, but now it all seemed to fade away. What happened?
There's actually a number of takeaways from the situation, even if you didn't invest in GameStop, because all of them are extremely useful in understanding how to determine what is and what isn't a good investment. So we saw that retail investors can influence certain stocks, since some traders on Reddit and a couple of institutions chose to bet against them, simply because they felt that GameStop's valuation in the marketplace had been suppressed by short sellers. So this eventually led to the highs of last week, where we had GameStop close at $347, and then retail investors were buying in to add to the momentum. And for that, you can see part one of this series, which we'll link in the description. This worked for a while, since GameStop went from like a $1 billion valuation to a $20 billion valuation. But then the bulls sort of struggled to maintain the momentum after it reached $20 billion, partially because it wasn't a small cap stock anymore. Also because it was starting to get really expensive and actually restrictive to buy stock.
I get it now. It makes more sense. Basically, retail investors joined forces via social media and pushed GameStop from $5 per share all the way up to over $300 per share. Too bad they couldn't keep it up there, like you said, due to the expensive prices and trading restrictions.
Yeah, so I mean, the ironic thing was that like retail did actually manage to manipulate prices in GameStop for a week or so, but that really kind of fizzled out because new hedge funds raised capital to short the stock when it was like 300 and 400. And then the price and trading volume didn't really rise fast enough to trigger a runaway short squeeze. So essentially, someone was bound to hold the bag at this point, because there wasn't anything specific to GameStop's earnings that would hold the price there. And those that brought in late at $300 to $400 were the people who took a chance on like a gamble, basically, and then lost. And then actually maybe some simple financial knowledge and technical analysis on the stock would tell them otherwise, that like the stock is overhyped. But then there's also some people who are highly dependent on emotions for decision making and picking stops, but that's also not really a good combination when deciding what to invest in my opinion. So it's helpful to look at the view that while some investors were left holding the bag, like others were able to earn significantly from this event.
Right. So what else did we learn from this crazy GameStop movement?
Number two is stock market transparency. So a lot of people were betting on retail being unimpeded when buying the stock, but this wasn't actually the case, since millions of retail investors were on Robinhood. And if millions of these people were somehow blocked from buying the stock, then that would prevent said stock from having that kind of a buying momentum.
That's crazy that nearly everyone and their moms is literally on Robinhood's. No wonder Robinhood's restriction on GameStop made it such a huge impact on the stock's movement.
Yeah, it's interesting. It also made a huge impact on a lot of other related stocks like AMC and Express. But yeah, as a result of all that blocking of buying stock, the public really got an opportunity to learn and know more how stocks settle and what it takes to own stock, even after you've bought it on an app. Since after you buy a stock, you're owed shares, but that isn't really transferred to your ownership until 2 business days later. I'd like to have show an interview here of Chamath Palihapiti's with CNBC here, just to show like the power of retail investors.
One company in one moment of time. What I'm saying is
there's like 10 companies, 15 companies, 20 companies.
You're broadly sweeping with a broad brush that says these guys don't know what they're doing and they don't deserve to do what they are doing. And what I'm telling you is there is a small part of momentum, there's a part that's fundamental analysis, and then there's a part that's just sticking it to the man. I'm not taking you away from that. But the reality is it's all allowed in a free market. And all of a sudden, if you start to gate decisions by individual people, all you're going to do is systematically lock in institutional ways of making money for institutional clients. And I don't think that's the solution. If you want to go and address the solution, fix how risk-taking happens at the institutional level, fix the precondition, fix the ability for these stocks to be so massively shorted in the first place, change the business model of funds so that they're not forced to be these small net, highly levered funds, change the leverage ratios. Those are all institutional decisions. But don't all of a sudden look at a short squeeze where money is being made by retail and all of a sudden say, hey, they could and may be the bag holder in the future, so let's make sure that they can never.
Yeah, and at that point, Chamath was cut off because CNBC decided that they would not allow him additional airtime. So that's obviously very interesting. But there's a lot of retail investors that really got caught up in the GameStop frenzy. And what Chamath is really referencing is the power of social media and its power to influence stock prices, sometimes like really erratically.
Wow, so apparently social media can be a great source of information for investors, right, Mike?
There's a lot of really smart people on social media like Reddit that do really great analysis and are or were employed in the financial industry. But at the same time, we also have bots and misinformation starting to spread in these same communication channels. And the thing is, like, misinformation happens in traditional channels as well. So, like, at the end of the day, the data is most likely out there. You just have to do some digging to uncover what is fact and what is fiction. It can be an echo chamber sometimes, which may lead you to purchase a stock with an unrealistic expectation. So in my opinion, I would use it as a way to get educated, but not necessarily rely on it for what stock to buy. Same thing goes with Twitter or even like YouTube. You should definitely not just listen to someone else's advice, but also confirm what they're saying is actually accurate. And we're not financial advisors. Me and David are not financial advisors. So this is just our opinion.
Yep, we live in a highly advanced information technology age where there's very good information out there. But knowing what to believe and understanding expectation is now more important than ever.
Yep. I mean, except that a lot of people didn't actually profit from GameStop. And therefore, there may be an entire generation that just grows up thinking that the banking system doesn't really serve their needs.
Oh, great. So what options do those people have?
Yeah, I mean, that generation of people, the people that don't believe that traditional finance works for them, they'll probably seek out decentralized finance or DeFi. And then the idea of decentralized finance or DeFi is that you just need a smartphone and internet connection, and there isn't a centralized authority to track and to know and sell your financial data and transactions. Things like savings, loans, trading, stocks, insurance, even like cryptocurrency, could all be accessible from like the palm of your hand and without any middlemen. So actually, that's a really alluring idea. But it's just really interesting. We may be witnessing kind of a shift in the market that people are investing in the future they believe in rather than simply investing in companies that like just make them money. We saw something similar happening when investors flocked to invest in Tesla versus the oil companies. And I believe we're seeing a similar shift from bank stocks and treasury bonds to cryptocurrency. In fact, actually, Bitcoin just recently passed $46,000. Yeah, I think investing in companies that are trying to make finance more accessible and more transparent to people like Square and SoFi, or even like cryptocurrency like Bitcoin and Ethereum would be a really good way to capitalize on that trend.
I agree with you. I've been hearing the idea of decentralized finance more and more these days. It makes sense to realize that everyone has access to all these financial services, and we can certainly use that to our advantage.
I mean, unfortunately for these people that are trying to avoid the traditional banking system, financial services are kind of everywhere, and it's not so easy to dump these financial institutions because they've invested in lots of different companies and it's not always clear who they invest in.
Right. So what you're saying is that Wall Street always finds a way to make their money, right?
For example, like BlackRock and Fidelity, the institutions that own trillions of dollars of assets, they decided to invest a small portion into GameStop. And they didn't tell anyone that they joined the Reddit traders in investing in GameStop. But we found out that they invested through their filings with the SEC. So it's helpful to be aware that Wall Street is always going to find a way to make money in the market, no matter what happens. Yeah, also, Wall Street is realizing that retail investors get a lot of information from Reddit or other social media platforms. So they're building tools to monitor what people are saying, so they can try to get ahead of these trends as well. But this isn't necessarily a bad thing. It's just people trying to adapt to change. And there's actually a really good blog post that talks about this, which we'll link in the description.
Dang! Wall Street is certainly smart. They see the momentum and they're shifting accordingly to ride the trend and make their money either way. Wow.
Not everyone is guaranteed to succeed in the market, but if you follow a few successful investors and start doing your own research on the companies that you invest in, then I think you'll do really well regardless. Maybe not as well as some other people who brag about their earnings on Reddit, but to be honest, everyone starts out somewhere. I think the best thing is just to start and to make sure that you're not caught up in a frenzy of following the crowd because you're following the crowd. In fact, it's probably better that you invest in companies that you just have a strong conviction in and aren't appreciated. I mean, that means they're discounted compared to the others that have been hyped up. And ultimately, the best person that can determine how to best protect you is you, because no one else fully can.
That's right, the stock market can be brutal and unforgiving at times. I guess a more conservative approach would be to simply invest in index funds. Right, Mike?
Yeah, I mean, I recommend if you're conservative or if your trades aren't working for you, just investing in some index funds like the S&P 500, which is the stock ticker SPY, or some exchange traded funds, aka ETFs, such as ARK-K, which is the ARK Innovation ETF, or ARK-G, which is investing in genomics from ARK Invest.
Thanks, Mike. That's a lot of great information. Well, we hope you guys find this video helpful. If you did, make sure to share with a friend and also subscribe and like for more videos like this. So, what do you guys think is the most interesting learning experience from GameStop? Do you guys invest? What's your investment strategy? Let us know in the comments below. We read every comment. Well, that about wraps up the video for today. Hopefully you guys are staying healthy, staying safe, and keep following that trend. We'll see you guys next time.